Hi, my name is Michael A. Richardson. I am Vice President of Community Relations at Mid-Atlantic Federal Credit Union. The program you're about to see is about providing financial tips to help you move forward to a more permanent living arrangement. In other words, a financial makeover. In this program, we'll cover managing your income and expenses as well as setting financial goals. Let's get going. Here's our agenda. We're talking about challenges, positives, managing your income, limit your expenses. What is the goal? Understand your income, flow of your money, and we'll have a brief summary. Now let's talk about some of the challenges as far as what we're working with. The shelter is usually temporary housing, and the average length of stay is only 90 days. The second challenge that we normally work with is setbacks when we find for the residents. In moving to extended housing, we find unpaid utility bills, meaning Pepco, Washington Gas. We have unpaid landlord or lease payments or unpaid rent payments. Those are the major setbacks that we have, challenges that we're working with. Now, we talked about some of the challenges that we have, but now let's talk about some of the positives of things that we're working with. 90% of the families that come to shelters are single, female, head of household. The average client's age is between 18 to 25. The average number of dependents is 1 to 3. The majority have jobs already, and the average income is $20,000 yearly. Let's talk about some keys to managing your income. First of all, you want to do your research and find out what is a good place to keep your money. You have actually 3 options. You can keep it at home, you can keep it at a bank, or you can keep it at a credit union. Now, if you keep it at home, in case you're robbed, there's no guarantee, there's no security, you can't get your money back, it's gone. If you keep it in a bank or a credit union, the credit unions and the banks are required by law to secure your money up to $250,000. That means if something happens in the economy, the bank fails, you are guaranteed to get all of your money back up to $250,000. On the other hand, our credit union carries some additional share insurance fund up to another $250,000, meaning that if you put $500,000 in your account at the credit union, you are guaranteed to get that money back, regardless of what happens in the economy. That is one thing that you want to look at in securing your money, whether it's savings or checking. Okay, let's talk about, does your account that you choose pay a competitive interest rate? You have to understand, in today's economy, our interest, no one is getting anything above 1% interest anywhere. So when you keep your money at home, you're not as good as the economy, but you're paying yourself 0 interest rate. Your choices, the credit union or any credit union or banks, they have different instruments to choose from. Savings accounts, checking accounts, or money market accounts. Let's talk about savings accounts. On our credit union accounts, we pay 0.1% interest on your savings account. Bank of America, they pay 0.05% or 0.05% interest on their savings accounts. Even SunTrust, 0.04% interest on their savings accounts. Checking accounts, we pay 0.3% interest on the account. Bank of America, 0.05%, 0.05% on the checking accounts. ING, which is the top checking account online in the country, they're paying only 0.2% interest on the accounts. Money market accounts, which is the highest that you have to have a high balance in order to have a money market account. 0.5% is what the credit union is paying, 0.5% interest. Bank of America, on the other hand, is paying 0.08% interest, and Capital One, which is the largest bank in the DC area, 0.05%, 0.05% interest. Not much, but it's something. Now let's talk about fees. When you do your research, I caution you, make sure you read all of the fine print in your agreements. You have to take into consideration NSF fees, loan fees, rate fees, Over limit fees. If you believe it or not, when you sign up for your credit cards, they will charge you over limit fees. What kind of late fees are being charged? No one thinks they're ever going to be late on a payment, but you want to know what it is just in case it does happen. ATM fees, which was another thing that was prominent in not too long ago with Bank of America. How much fees do they charge you for having an ATM card? And overdraft protection fees. Again, if you overdraft your account, you can get protection for it, but how much are the fees? Do your research. Make sure you find out what all of the fees are and are aware of them. Is it convenient? Is the location that you're going to be doing all of your money, all of your savings accounts, conducting your business, is it convenient to you? Is it open when you need it to be open? Weekends, afternoons. That is important. And support. Does your financial institution support your community and what they do? Are they out there? Are they supporting nonprofit organizations? Do you see them? Can you talk to them? The last thing that you want to consider, are they courteous? When you have a problem, when you go to them, do they solve that problem? Are they efficient? Are they courteous with you? Those are things that you want to do in your research to make sure that you're happy with your financial institution. Let's talk about limiting your expenses. The big question that you want to ask is, do you pay to cash your paycheck? If you had direct deposit into a bank or credit union account, you would not pay anything. However, if you're constantly going to payday lenders or check cashing facilities, you are going to pay for that convenience. Just to give you some examples, the check cashing facilities, they usually charge you a percentage of the check, 1%, 2%, 3%, sometimes 5 or 10% of whatever the amount of the check is. Say, for instance, your check is only $100. Well, a 1% fee is only $1. However, if you go to one that charges 10%, that's $10 out of that $100. So you've only got $90 left. Now, $100 may not be your paycheck. Maybe your paycheck is $2,000. All right. Again, that's no cost to you if you have a direct deposit using a net check. But if you go to a check cashing facility at 1%, you've given away $20 already. And if it's a 10% check cashing facility, they're going to charge you $200 on your $2,000 income. Do you want to give that money away? I sure don't. Okay, now let's talk about tracking the expenses. It's something that we never want to do, but it is necessary if you want to know where your money goes. One thing that I caution everyone, try to be as accurate as possible. In a week's period of time, you want to identify the places that you go to, what items that you bought, whether you bought it on your debit card or credit card, and the amount. You'd be surprised with how much you spend within a week. Say, for instance, on Monday you go to CVS and you buy a pack of cigarettes. That costs you $6.30. Tuesday you go to Safeway. You buy some snack food. Well, it costs you $12. Wednesday you eat lunch at McDonald's. Another $5.63. I know that because I watch my daughter in her account. Thursday you go to the ATM. You've run out of cash. So you get $20 out of the ATM, which costs you $3.50. So you've spent $23.50 on Thursday. On Friday, you go to Walmart. You need some toothpaste or deodorant, and that costs you $7. How much do you think you've spent in 1 week just by going through those few incidentals? Add that up, $55 a week. Track your expenses. You'll see where all your funds are going. It's not that hard. Just you need to take care of your expenses. We talked about some of the incidentals before about the expenses. Now let's talk about some of the major ones that most shelter residents are experiencing on a monthly basis. And you want to make a chart, just 2 charts, how much it is percentage of your pay. Daycare is a major expense. Identify that. Storage fees. Most people they don't have furniture that they can take with them to the shelter, so you have storage fees that you're contending with. Food and clothing. That may or may not be a big expense for you because the shelter, they do provide clothing and food for you to an extent. Transportation is another big expense. You want to identify, do you use public transportation? Do you take the bus to get back and forth to work? Do you take a cab? Or if you drive your car, then we're talking about some additional expenses. You got gas you need to put in your car. You need to pay insurance on that on a monthly basis. And the car does need repairs. So you want to take all that in consideration in making your budget. Make sure that you identify all of your monthly needs, all of your expenses that stay within your budget. We talked about expenses, we talked about income. Now let's talk about your goal. What is a good budgetary goal when you make up your budget? We talked about what comes in as far as your income. We talked about what goes out as far as the expenses. So what's left? We need to make sure that we have 30% left of your budget so that you can account for your rent. You need that 30% in order to show that you can maintain a more permanent housing. Now, what does that 30% mean? That's 30% of your gross. Now, on an average income of $20,000, if you're single head of household, you're going to be making $1,600 a month. Now, what does that mean? 30% of that is $500, comes off of that $1,600. So if you have one child, you're making $1,300, $500 from that, you're going to have $800 left. However, if you have 3 children, same $1,600 a month, you're going to be earning $1,400. $500 from that is going to leave you about $900 that you have for your monthly expenses. Just remember, 30% is required in order to show that you can put aside that 30% you want to put into a savings or checking account and earn some money, some interest. Okay, let's talk about some of the standard deductions that come out of your paycheck. I've provided you a chart here showing the standard taxes that come out of your pay on a monthly basis. Again, using that same $20,000 or $1,600 a month. You have federal withholding taxes, Social Security, Medicare, state withholding taxes. All of that comes out. I've also provided based on the number of dependents, and this is based on Montgomery County, Maryland. When you fill out your W-4, you tell your HR department how many dependents that you want to reserve for. And your chart goes from 0 to 10. If you notice, on the federal withholding taxes, no deductions are taken out after the 5th dependent. So you can maximize the amount that you get back in your paycheck if you claim 5 or more. In the Maryland tax, you fill out the Maryland form, the MV 507 with your HR department, and you tell them how many dependents you want to reserve for. If you notice, they stop taking out after the 5th. So if you claim 6 dependents in Maryland, you don't get any taxes taken out. But you will notice that Social Security and Medicare, they take their money each and every month. So you cannot make any adjustments on that. Your chart tells you how much is left in your net check after you identify your deductions. And I've just given you an example. If you use 6, which is the maximum number of deductions for both federal and state, how much extra money that you can give yourself on a monthly basis. Now, we talked about payroll deductions and automatic deposits into your account earlier, but let me give you some examples of why. Here's a chart that shows the flow of the money. First of all, one of the main reasons it's free. It doesn't cost you anything. The second reason is that you get access to your payroll or your payroll money right away. There's no waiting in it. For example, your bank sends a payroll data to the ACH operator, which is the account clearinghouse, which is normally the Federal Reserve. The ACH operator sends the data to your bank, and then the bank puts the money in your account. All of that happens within seconds. Usually, for instance, I know I get paid on Friday. My ACH operator sends the data on Thursday. Thursday night, by midnight, the money is in my account and I have access to it first thing Friday morning. Unlike if you are continuing to use your check, get paid by check, and you try to cash it yourself, you find yourself picking up your check at your employer, run into a bank to cash it, or a check cashing facility, and you usually don't have access to your money until Saturday or the next business day if the bank requires you to keep that check on deposit. So it doesn't cost you anything. It's quick, it's secure. You have access to your money right away. Let's talk about paying with a debit card or credit card, which is basically the same thing, and the flow of that transaction. You have to keep in mind that this information all transfers all within seconds. When you go to a merchant and you present your card for payment, that mag stripe on the back contains a lot of information. That information is transferred back to your bank through the electronic system, and it verifies all the information there. Your name, account number, your address, social security number, date of birth, all of that is exchanged back and forth between your bank and the merchant's bank. When the merchant's bank is satisfied that you have enough money in the account to cover the transaction that you're trying to purchase, whether it's trying to get money out of your account, ATM account, or make a purchase at a store, once they verify the information that you have enough, then you get the approval. The money is exchanged between the banks right then, and then the approval is given to the merchant. All of that happens within a second. You have to understand the flow is immediately. That is why it's important to guard your credit card, guard the information on the back of the credit card, which is in your mag stripe, and that once you get it, once you make that transaction, it immediately comes out of your account. Now let's talk about paying with a check. This is something that's near and dear to my heart because I still use check, unlike most people. My kids keep on telling me I am old fogey. But when you write a check, you take that instrument and you give it to whoever you want that check to be presented to. That person, whether it's an individual, they will present it to their bank, or if you're paying a bill, that bank will send it to their bank. Once that bank gets it, then they in turn send it to the Federal Reserve. The Federal Reserve then makes contact with your bank to make sure that the money is good. They pay the bank that received the check, and they take the money out of your account. Now that process happens within 24 hours, supposedly. The Federal Reserve requires, or Congress made a rule that all checks, local checks, should be cleared within 24 hours. And the process usually works like that. Again, you present the check, you the maker, you present a check to whoever you want to get paid. That person presents it to their bank presents it to the Federal Reserve. The Federal Reserve takes the money out of your account, gives the money to that person's bank. All is well. That money comes out of your account, all within a 24-hour period. All right, as a quick summary, I want to encourage you to take the time to do your research. Make sure you read the small print. Don't let nothing go by you that you don't know about. Choose your financial institution that if it's your lifetime partner. Maximize your income. Don't give your money away. Track your expenses. Set your goals. And don't look back. Keep moving forward. Again, my name is Michael Richardson from Mid-Atlantic Federal Credit Union, and I wish you the best of luck with the information that you've had in this financial makeover.